GameStop shareholders have officially made their decision. The company has now received approval to increase its authorized Class A share count to 2.5 billion shares, with 68.7% of votes cast supporting the proposal. At first glance, that sounds like massive dilution. But the official filing tells a much more complicated story. Because buried inside the post-meeting documents is a key detail suggesting management wants far more strategic flexibility, not necessarily an immediate flood of new shares. So what exactly did shareholders approve? And why is Wall Street suddenly paying so much attention? That's exactly what we're breaking down today. If you enjoy fast, data-driven stock analysis that focuses on the numbers instead of the headlines, make sure you're subscribed to the Daily Squeeze. We cover the biggest market-moving stories every day, so you never miss the next major catalyst. Now let's get into what actually happened. On July 7th, GameStop held its 2026 annual meeting of stockholders, where investors voted on several proposals, including one that quickly became the center of attention. Proposal 5 asked shareholders to approve an amendment increasing the company's authorized Class A common stock to 2.5 billion shares. When the votes were counted, the proposal passed with 68.7% approval. That officially gives GameStop the legal authority to authorize up to that number of shares under its corporate charter. But here's the part many investors misunderstand. Authorized shares are not the same as issued shares. Authorizing additional shares does not mean billions of new shares suddenly enter the market. Instead, it gives the company greater flexibility for future actions if the board decides to use that authorization. Those actions could include acquisitions, employee compensation, financing, or other strategic transactions, depending on future board decisions. That's why investors have been debating this proposal for weeks. Some see it primarily as creating the potential for future dilution. Others view it as giving management a stronger toolkit for pursuing larger corporate opportunities. One area drawing particular attention is GameStop's previously disclosed interest in eBay. Company filings have discussed the proposed acquisition as part of its broader strategic direction, and supporters argue that a larger authorized share pool could make future equity-based transactions easier to structure if management chooses to pursue them. Whether any acquisition ultimately occurs remains uncertain, but the vote removes one potential corporate hurdle. There was another important development in the post-meeting disclosures. GameStop also confirmed that a required regulatory condition under the Hart-Scott-Rodino Act had been satisfied. According to the company's disclosures, this changes the legal framework surrounding certain derivative positions tied to eBay shares. Supporters believe this provides GameStop with greater flexibility in how those positions could be managed going forward. Exactly how management intends to use that flexibility remains one of the biggest questions investors are now watching. At the same time, not all of the news has been interpreted positively. Some valuation models have recently classified GameStop as trading above their estimated fair value, which could influence certain quantitative investment strategies. It's important to remember that these models are based on assumptions and can differ significantly from one another. A valuation model is not a prediction of where the stock will trade next, but it does help explain why different investors can look at the same company and reach very different conclusions. So where does that leave GameStop today? On one side, the company now has significantly greater strategic flexibility following shareholder approval. On the other, investors continue debating how and whether that flexibility will ultimately be used. The next chapter will depend not on the vote itself, but on management's actions from here. If GameStop begins announcing major strategic transactions or acquisition progress, the market will quickly reassess today's vote through a very different lens. For now, investors have clarity on one important point. The shareholders have spoken. The authorization has passed. And GameStop's leadership now has a much larger set of corporate options available than it did just a few days ago. If you enjoyed this breakdown, make sure to like the video, subscribe to the Daily Squeeze, and turn on notifications so you never miss our next deep dive into GameStop and the biggest market-moving stories.